Hi, everybody. Thanks for joining me. Today, we are going to talk about one of the most difficult topics for newer investors. That is, when is it okay to sell stocks? This is especially important in today's market environment to make sure you know the difference between the good reasons to sell and the bad reasons to sell. So, we're going to get into that in just a second. Before we do, please click subscribe to my channel if you don't subscribe already. Keep up with all of my latest investing and personal finance content. And be sure to check out a message from this video's sponsor, The Motley Fool. You can go to the link you see on your screen right now and get their 10 best stocks to buy right now. So let's get into some of the reasons that are okay to sell. So, number one, first and foremost, 9 times out of 10, when I sell a stock, it's because the reasons I bought the stock no longer apply. My investment thesis has been busted. Maybe the company's losing market share. Maybe its growth is slowing unexpectedly. Maybe its management team is leaving and the new managers aren't exactly as great as the old ones. There are a bunch of reasons but the bottom line is if the reasons you bought the stock no longer apply, then it's okay to sell. Reason number 2, if your stock is getting acquired or merging with another company. So there are two types of acquisitions. One, if a company's being bought out in cash, meaning that, company X offered $50 a share in cash and you'll just get a lump sum of cash when the deal closes. In that way, it's okay to sell, take the money, and move on. Usually, when that happens, you get a nice little pop in the stock when the merger is announced, and it can be okay to walk away. The second type of acquisition is a stock deal or a stock in cash deal, where another public company buys out the company that you own, and you end up with shares in that company. Um, there are a few good examples of this in the market, but generally you have to ask whether or not you want to own shares in the acquirer. Just a recent example from my own portfolio, a company called MGM Growth Properties, which owns a lot of MGM casino real estate, was bought out by a company called Vici Properties, which owned a lot of Caesars casino real estate. And it was a stock deal. So investors in MGM Growth Properties got stock in the acquirer. So when that happens, you have to ask yourself if you want to own the other company. And if the answer is no, it's okay to sell. Number three, to pursue more attractive investment opportunities. So this is kind of a gray area here. And usually, when this one is the good reason to sell, one of the other things applies. So if you have a stock that isn't one of your favorites, but you like it long term, and another opportunity comes along to deploy capital that you're really excited about. Let's say one of your favorite stocks drops 20% for no reason and you see a great opportunity to buy. Then it could be okay to free up some capital from a stock that is on your lower end of the conviction spectrum and free up capital to buy that one. So that's number three. Number four, if you need the money, probably the most obvious reason to sell that's okay. If there's something you need to pay for and you need to free up capital. A big part of my plan to pay for my children's college education is with the stocks I'm investing in now. I have little kids now. So when they get to college, I'll probably end up selling some of my stocks. Not that I don't believe in the business, but I need the money for an expense that I had planned for. After all, that's why we invest. So if you end up needing the money, it's okay to sell. Five is tax loss harvesting. So if you are sitting on a loss for a stock, which in 2022, let's be honest, pretty much everyone listening to this who invests in stocks is sitting on a few losses in their portfolio. And if you're not that convinced that things are going to turn around in a timely manner, um, maybe your thesis has changed, kind of like I mentioned already, or maybe it's just a company that just isn't doing well in the current environment. And by selling at a loss, you can potentially write off that loss on your taxes. It could be a good reason to sell. So those are five good reasons to walk away from a stock. Just to recap real quick, the reasons you bought no longer apply. The company is getting bought out. You find a more attractive investment opportunity that you'd like to free up some capital for. You need the money to use for everyday expenses or a planned purchase. And five, to lock in a loss for tax purposes if you've kind of lost faith in the stock. So those are five good reasons to sell a stock. It's almost more important to know when not to sell. Specifically, three reasons. Number one, and this is going to sound a little contradictory to the one I just mentioned, don't sell a stock just to save on taxes. If you have a stock that's down, but you still wholeheartedly believe in the business, you want to own it long term, you can't really understand why it's down, you think the business is doing great, don't sell just to lock in a tax loss. That's not usually a great strategy. Number two, don't sell just because the stock's price went up. A lot of people say, I bought XYZ company, the price doubled in the past year. Should I sell and lock in my profits now? The short answer is it depends. Do the reasons you bought the company still apply? Is it still growing as you expected? Is it doing what you thought it was going to do? And if the answer is yes, selling just because the stock went up could be one of the worst decisions you could make. I learned this lesson a very hard way. I invested in Tesla's stock right after its IPO. The stock tripled roughly after Motor Trend named the Model S the car of the year, and I sold and walked away in order to lock in my profits. That decision cost me about $500,000 in long-term gains. Tesla's been one of the best performers in the stock market since that time. So just because the stock went up all by itself is not a great reason to sell. The same can be true just because a stock went down. If a stock went down, but you still love the business, it's not a great reason to sell. So it's common knowledge that the central point of investing is to buy low and sell high. But our emotions and our human nature want us to do the exact opposite. When when stocks fall, it's our instinct to sell before things get any worse. That's a terrible mentality. It's really important to evaluate these as businesses, not just as pieces of paper with price tags on them when you're making those decisions. So that's a general rundown of when it's a good idea to sell a stock and when it's not a good idea to sell a stock. Hopefully, if you found this informative, please be sure to subscribe to my channel if you haven't done so already. I post investment content like this all the time, and hopefully you find it helpful. So thank you so much for tuning in, and I will see you next time. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.